Good evening, everyone. Welcome to the official YouTube channel of Officer Study 24/7. So, first of all, let me know how are you all, and also let me know is audio video both are okay. Are we good to go? So, we have already started the victory series, as you all know. In the morning, we are having PPB sessions, and in the evening, we are having IE, IFS, Indian Economy, Indian Financial System sessions. So, this is your next session, or I can say the class number 12 of your victory series for IE, IFS subject, in which we are discussing advanced questions from the module D. So, as you know, we have started from the module D, then will we go to the module C, then A and B. This is the sequence we are going to follow in this particular series. Okay. So, let us start. First of all, you can see this is the victory series, class number 12 of yours, and we have started Indian Economy, Indian Financial System sessions with the module D. Unit number 29 till 45, this is your module D syllabus. We have already covered your financial market, your money market, we have covered capital market, fixed income market, foreign exchange market, interconnectedness of market, your merchant banking, derivative market, factoring, venture capital, lease finance. All these units till 39th unit we have completed. So, today we are going to discuss your unit number 40, that is your credit rating and credit score. Okay, this is the unit we are going to discuss in today's session. But before moving forward, if you are new to the channel, I would suggest all of you go to the playlist of the channel and do watch all the sessions of your victory series as well as your aim series that already used to go on, in which we have discussed the basic question from each and every unit of your IEIFS, and then we have started your advanced series. Okay. So, do make sure you check all the sessions which are available in the playlist. Do watch them in recorded form. In the double speed, you can watch it. It will really help you to practice your more and more questions. Okay, so let's move forward and talk about the chapter. Apart from this also, I want to give one more information to all of you. The crash course is also starting. I am starting your crash course from 18th of March, है ना? So, the detail about the crash course I will give you in the end of the session, but yes, crash course is there. We have launched the crash course. So, when it comes to the unit number 40, credit rating and credit scoring, first of all, credit rating will be provided by credit rating agencies. Okay, it is provided by whom? It is provided by credit rating agencies, and they are regulated by SEBI, Securities and Exchange Board of India. Okay. Now, when it comes to the credit scoring, it is provided by credit information companies and they comes under the Reserve Bank of India. They both are different. The credit rating and credit scoring, they both are different concept. First is provided by credit rating agencies. Second is provided by your credit information companies. There are 7 credit rating agencies in India which are approved by SEBI, and there are 4 credit information companies in India. Okay, do remember their number. In case of credit rating, they provide the credit rating to the countries and the companies. Okay, if we are talking about CRISIL, let's say it provide rating to the countries. It provide rating to the companies which are working in India. And credit score will be provided to the individual persons or some commercial companies also. So, that's the difference between credit rating and credit scoring. It's a very small unit. It's a very easy unit. You can easily understand this unit. And in one study, you can understand the concept also. So, do make sure you cover it because 1 or 2 questions might be seen from this topic. So, let's move forward and discuss the questions on the same topic that will clarify this chapter for you more. So, first question is talking about which of the following are correct about the benefits of credit rating to the investor. Okay. So, credit rating when you are providing, it is beneficial for whom? It is beneficial for the investor, it is beneficial for the borrower. For both, that is beneficial. Let's say for example, when I am going to the bank and asking for a loan and bank is providing me loan. So, I will be given a credit score from a certain credit information company. It will be good for bank because bank will know the customer to whom we are providing loan, the customer is default or fraud or not. Hai and it is beneficial for me as well because I got the chance because of the credit score that bank is actually giving me the loan. Okay. So, the benefits will be for both the parties. Similarly, here we are talking about the benefit of credit rating for the investor. First is saying information will be available at low cost, like the investor will get the information about the credit history at a very low cost first. Second is saying advantage of continuous monitoring. Okay, when there is a credit rating agencies involved, they will continuously study, they will continuously monitor the company, the country, है ना? Like it's not like one time you have given the credit rating, that's it. After that, you do not care what's happening in the company. No, you will, there's a periodic updation. Time to time, they will be updating the credit rating as well. So continuous monitoring is there. Third is saying it provide investors a choice of investment. Obviously, है ना, after seeing the credit rating, they give us the choice. This is the rating of this company. If you want, you can go move forward and invest. If you don't, you do not. So that's provide investors a choice of investment. Fourth is saying assessment of risk also be done. So these are the 4 options in front of you, and you have to answer which of the following is correct about the benefit of credit rating agencies or credit rating to the investors. And the right answer will be all. Right answer is all of the above. All these are the benefit for the investors of the credit rating. Okay, right answer will be your C. All of the above. You will get information at low cost. You will get a continuous monitoring advantage. You will get a choice of investment. Also, the risk will be assessed time to time. So, right answer is all are the benefit to the investor. So, right answer will be your C. Okay, next. Next we have which of the following are the characteristics of credit rating. Characteristics of credit rating it is asking. है ना, credit rating first of all it is provided by credit rating agencies which are regulated by SEBI, we have already discussed. Now the question is asking which of the following are characteristics of your credit rating. First is saying expressed in symbols. Second, carried out by experts. Third, guidance about investment, not recommendation. Fourth, assessment of issuer's capacity to repay. And fifth, based on data. So out of these 5 points, what do you think which of the following is the characteristics of credit rating? A, B, C or D? Okay, so the right answer will be your actually all of the above. They all are the characteristics of your credit rating. All are characteristics, है ना? It is expressed in symbols, है ना? Symbols will be given to you in which the credit rating will be expressed to you. Second, they are carried out by experts. It's not like anybody can come and tell this is the rating of this company. No, there will be experts who have experience, who have knowledge. Then guidance about investment, not recommendation. When the credit rating agencies are giving rating to you about any company or about any country, they are not telling you to invest in this company. They are not recommending you to invest in the company. They are just giving you the guidance. Hana, they are just letting you know that this company is a good company to invest and this is not. Now it's up to you. You can decide where you want to invest. They are not providing any kind of recommendation. Assessment of issuer's capacity to repay, है ना? When the credit rating agencies are providing you credit rating, they actually assess your situation. They actually assess the situation of a company. Are they capable of making the payment of making the repayment of this fund which they are collecting? Then also based on data. So right answer is D. All are the characteristics of your credit rating. All are correct. Right answer will be D. All are correct. Okay. Next question. Next is talking about here, dash is an analysis of credit risk. Dash is an analysis of credit risk associated with a financial instrument or a business entity. And it is a risk grade given to a particular entity which is based on its credential and the extent to which the financial statement of entity are sound in terms of your borrowing and lending that has been done in the past. So I guess it's very easy. We are saying dash is the analysis of credit risk. But the thing is, credit risk are analyzed in both, in your credit rating as well as credit score. So what we are actually talking about it? We are talking about credit rating, credit score, both or none. So now you can read forward. It is in the form of alphanumeric grade, है ना? So now you can see when it is alphanumeric grade, you can find out which of the following will be correct. After that, it is saying accompanied by a detailed report based on the financial history of borrowing or lending and credit worthiness of the entity or the person operating from the statement. of its asset and liability with a view to determine their ability to meet the debt obligation. So you can easily find out here, is it credit rating, credit score, or both? Okay. So which of the following will be correct? So actually, because it's a alphanumeric grade, it is your credit rating. Credit score will be your numeric data, है ना? Always credit score is in the numerical value. Here, alphanumeric grade means your alphabets and numericals, numeric numbers will be there. So right answer is credit rating, not a credit score. Okay. So right answer is A. So these kind of minor differences in the statements or in the options will be given to you, that you have to find out, and for that you need a proper clear understanding of the chapter. Okay, now which of the following is not one of the credit rating agency approved by SEBI? Which of the following is not one of the credit rating agency which is approved by SEBI? CRISIL, India Ratings, ICRA, CARE, Brickwork, Informatics, Accurate, or CIBIL? So in the starting of the chapter, I have told you credit rating agencies which are approved by SEBI is 7, and the credit information companies are 4 only. Okay. So here the names have been given 8. So it's very obvious one of them is not a credit rating agency. Only 1 and 4, all except 8, only 2nd, 5 and 8, only 8. Which of the following is not one of the CRA? Not one of the CRA. So it's not 1st and 4th, it's not 2nd, 5th and 8th. Actually, it is saying all except 8 and only 8. It can create a confusion in mind of yours. But do check what the question is asking. Which of the following is not one of the credit rating agency? If you say all except 8, it means 8 is credit rating, but all the others are not. But the truth is, the CIBIL is the only credit information company here. So right answer will be your D, only 8. Only 8 is not a part of your credit rating agency which have been approved by SEBI. All the others are. So your right answer will be only D. Only D means only 8, D option. Okay. Next. Okay, next question we have matched the following. In one side you have got the investment grade AAA, BBB, D and B. And the other side you have got the definition of these investment grades. So AAA, BBB, D and B, these are the investment grades in front of you. So let's match them. First is saying it denotes default in terms of timely payment of interest and principal. It denotes default. It is itself saying that the default will be there. And the default will be defined in which? In the D statement, or the D statement means D rating. So the third is A. Sorry, third is A. Okay. So now you can eliminate the option number A and you can eliminate the option number C, because they are saying B is the correct. No. When there is already defined that this is a default, there is that default, the rating is saying it's a default. That's a D rating. So third is A. Now denote high risk is there. So high risk will be available in which of the following? It will be available in the B rating. So fourth is your B. So now you can see third is A, fourth is B is available in only your D option. So right answer is your D. So denotes default in terms of timely payment is D. Denotes high risk is your B. Then denotes moderate safety in terms of timely. Moderate is there, not highly. Moderate is there. It means second is C. And denotes highest safety. Highest safety is in your AAA. So first is D, second is C, third is A, fourth is B. That's the combination, the D option. Okay. So you can simply say the right match the following answer will be D option. So this is how you have to find out which of the following is correct in case of match the following. Do make sure you read the definition and try to match them with the right combination. And always make sure that you are using elimination method wherever you are practicing. If you are giving a mock test by yourself, do make sure you use the elimination method. Okay, so right answer is D. Next question. At present, there are 4 CICs operating in India. Which of the following are the CIC in India? So there are 4 and the name have been given 5. So out of these 5, you have to find out which 4 are there. TransUnion, Experience, CRIF, Equifax or CRISIL. And the right answer here will be your CRISIL is a credit rating agency. So all are there except 5. So right answer will be C. Okay, all are the part except C. So right answer will be your, except 5. So right answer will be C. Because CRISIL is a credit rating agency. It's not a credit information company. So right answer will be C. All except 5. Next question. A typical credit report has 6 sections, which sum up the applicant's demographics and credit profile and provide details of his/her credit history. These sections include which of the following? So which of the following is correct here? A, B, C or D? So first is saying credit score, personal information, contact information, employment information, account information, inquiry information. These are the 6 sections that have been said that there will be in the credit report. And right answer will be all. Actually, these are the right 6 sections which will be there in the credit report of your credit rating agencies. Okay, so right answer will be your all. The D will be right answer, that is all. Okay. Next question. Next we have this. It is talking about a dash is, what happened? Okay. Question is asking a dash is a statistical number that evaluates a customer's creditworthiness and is based on a credit history, and lender use it to evaluate the probability that an individual will repay his or her debts or not. So first of all, it is a statistical number. If it's only a statistical number, it means it's a credit score. So you can simply eliminate the B option and the D option, because it is a credit score, because it is saying statistical number is there. Second, it is a dash digit summary of the credit history of an individual. So if you talk about CIBIL scores are of 3 digits. How many digits are there? 3 digits are there. So you can simply find out here, the right answer here will be 3. Okay, so the first option is saying 3 and the C option is also saying 3. So we cannot eliminate it. Next, it ranges from dash with dash being the best score and dash being the worst. What is the range of credit rating? From 300 to 900 or from 200 to 900? So it's very obvious. Acha, all dash use a uniform system. All CICs, credit information companies. So you can say credit information companies are common in this option. But now the score is different. 300 to 900 is correct. So right answer is your A. So it is the credit score that will be provided in the 3-digit summary by the CIC credit information companies. They will be using it at a uniform level. And the range of credit score is 300 to 900, in which 900 being the best and 300 being the worst. Okay, so consequently application with higher credit score have better chances of success, and in sanction, and these with the lower scores have lesser chances. Obviously, if you have a score of 300, there is a less chances bank will provide you the loan. But if you have a score that is your 900, it means you have a maximum chances that the bank will give you loan, and definitely bank will give you loan. So right answer is A. Okay. Now, next question is talking about which of the following statement are correct. So it is talking about a rating again, a positive, stable or negative outlook, and none. So there are 3 outlooks we are talking about: stable, positive and negative, and you have to answer which of the following is the correct statement. First is saying a stable outlook indicates a high likelihood of a downward rating revision in the near. A positive outlook indicates a high likelihood of an upward rating revision in the near to medium term. And the third is saying a negative outlook indicates a low likelihood of rating change in the near to medium term. So which of the four have to find out? So stable will be a kind of likelihood of a rating change, like there is very low chances it will change, है ना? But if it is a negative, there is a high chance the downward. So this one is the negative definition. This is for the stable definition. Second option is correct because the positive outlook simply means that there is a chances of high likelihood upward rating, like in the near to medium term, like 3 to 6 months, between 3 to 6 months duration, there is a high chances that your rating will go up. It means towards the positive sign. Okay, that we're talking about. So right answer will be your B. That's the correct statement here. Next question, a very simple question is there that we have already discussed, that how many approved credit rating agencies are there in India. That we have already discussed. So how many approved credit rating agencies are there? There are 7 credit rating agencies which are approved by SEBI because SEBI regulates them. So right answer will be your C. Right answer will be your C, B. Sorry, B, that is 7. Okay. Good evening everyone, welcome to the official YouTube channel of Officer Study 24/7. So first of all, let me know how are you all, and also let me know as audio video both are okay, are we good to go? So as you know, we have started this victory series in which every day we are discussing one particular unit of your, and today it is our 13th number class. So yesterday we had 20th class, 12th class, and today we have a 13th number class regarding your IFS. So as you know, we have started Indian Economy, Indian Financial System from module D. Okay, so module D starts from the unit number 29 and it ends to the 45th unit. Now when it comes to module D, we have already covered till your unit number 40. So this is our 13th class and the unit number 40 we have completed from 29 to 40. And today we are going to start with the mutual fund, that is unit number 41. So today's session will be all about mutual funds. Okay. So before starting the session, first of all, those candidates who are new to this channel, I would love to inform you all that Officer Study 24/7 channel is a channel in which you will find all these sessions regarding your JAIIB, CIB, bank promotion exam, all the solutions will be available for all of you. Apart from that, you will get JAIIB May 2024 series right now going on in this particular channel, and these series are going on Monday to Saturday. And on Sunday, we have started our new sessions, or I can say the special sessions. Every Sunday, there is certain special session related to certain subject of yours going on. So do make sure you do not miss any session on Officer Study 24/7 because it is the high time to start your preparation for the May 2024 exam. Okay, and if you want to join regular session of IFS, then do join the channel at 7 PM Monday to Saturday. And if you want to join the PPP sessions Monday to Saturday, it will be available at 6 AM in the morning. So these are the two timings for you for IFS and PPB, and I will be your mentor for both the subjects. So do make sure if you have any doubt or if you are looking forward to prepare for your JAIIB exam, follow this session, follow this channel, do subscribe the channel. Okay. Apart from that, if you are new to the channel and you haven't seen any sessions till now, and if you want to watch the earlier sessions also, then go to the playlist section of the channel and you will find all the sessions, all the subjects playlist available in which you will find the recorded session of each and every topic. Okay, so that's all. Acha, apart from that, one more information is there. We are starting a crash course. So, I am starting a crash course from 18th of March. Okay, from 18th of March, I am starting your crash course. In the crash course, I will show you the batch in the end, but the crash course is starting from 18th of March and IFS will be there from 18th of March. Apart from that, I would also want to inform you guys that 18th March IFS subject will be there. Apart from that, all the other subjects will also be started, and right now 81% discount is going on your crash course, that is your on the code Y496. But apart from that, one more important thing is there, like on the Mahapacks. On Mahapack, you are having a double validity plus 81% discount, and this is the crash course starting in March, but in April, you will find revision batches also. Okay, you will find power pack batches also. So all these will be available for all of you if you want to get the crash course or the comprehensive course or the revision course, or let's say power pack course or numerical batches, etc. If you want all of these, this is the solution for all of you, that you can enroll in the Mahapack right now because it is having double validity plus 81% discount. And this will be available till tomorrow morning. So if you are thinking about enrolling, enroll soon and get the benefit of this. And how to enroll, I will let you know in the end of the session. Okay, so today's chapter is mutual fund. First of all, let's discuss the basic terms or the basic understanding of the chapter. Then we will go to the questions. Okay, so first, when it comes to the mutual funds, who regulates the mutual fund? Hana, who regulates the mutual fund? So first of all, mutual fund is regulated by SEBI. The first thing is that mutual fund are regulated by SEBI, Securities and Exchange Board of India. Second, they have a self-regulating organization also, that is known as Association of Mutual Fund of India, that is AMFI. It is the self-regulating organization of mutual funds. Apart from that, what actually the mutual funds are doing? Mutual funds actually collect money from various investors, and then they invest that money in the diversified sector, in the different sectors. Why? Just to minimize the risk. To minimize the risk, mutual fund invests the money of other people in the different sector, in the diversified sector, so that the risk will be minimized. Let's say, for example, if I have a 10 lakh rupee and I want to invest this money, I have savings bank account option, I have let's say RD or FD option, I have a share market option, I have a mutual fund, I have a lot of options to invest in the market, but I have no knowledge about it. I do not have knowledge about it. Let's say I have heard somebody have told me that the share market is the market which is giving a best return, Hana, right now. So I thought I want the best, everyone wants a best return on their investment. So I invested the whole 10 lakh rupees in the share market. But nobody have told me that the risk and return, they both are directly proportionate. They both are directly what? Proportionate. Risk and return is proportionate. If you are getting a high return, you have to bear the high risk as well. If the return is less, risk will be also less. So I invested the whole amount of money in the share market, and share market fall and all my money fall. It means I have to face the loss. So if you do not want to have that, you can simply give your money to the mutual funds. They are the professional managers. They have knowledge about the market. They have how to invest funds. They have everything, and knowledge about it. So you can simply give your money to them and they will invest your money in diversified sector. Some money will be invested in the share market, some in commodity market, some in derivative market. Some amount of money, let's say, have been deposited in FD. Some in the insurance policy, some amount of money invested in the gold market, let's say, and the remaining amount have been invested in the real estate. Okay, so what happened? Your money have been distributed in the different sectors for the investment purpose. And why this have been done? So that if, let's say, share market is going in a loss, you do not have to lose your 10 lakh rupees. You are only going to lose whatever money you have invested here. But whatever loss you are facing in the share market, there is a chances you can recover that loss from the real estate. So this is what mutual funds do. They collect money from various investors, invest their money in the diversified sector to minimize the risk. Okay, that's your mutual fund. Okay, now it is regulated by SEBI and it is having a self-regulating organization, that is AMFI. Clear? So this is the detail about mutual fund. A lot of type of mutual fund schemes are there that you have to study in the detail because it's a very important chapter. Clear? Chalo. Now let's move forward to the MCQs. So the first question in front of you is this. That is asking which of the following is our correct classification of mutual funds. So mutual funds have been classified in the different ways. First is saying organizational structure of fund, management of portfolio, investment objectives, classification by organizational structure of funds. So what do you think, which of the following is correct? So when you are doing a classification of mutual fund, you will find that the different types of mutual funds are there. One is there also on the basis of, let's say, your maturity. like open-ended, close-ended mutual fund, that is also available. So now you have to answer out of first, second and third, which of the following is actually the right classification of mutual fund? A, B, C or D. Only one, only three, only second and four, or all? And the answer is all of the above. Right answer is what? All of the above. So all the three are the parts or are the classification of mutual funds in the Indian economy. Okay. Second, it is talking about which of the following is are correct about the role of mutual funds, like what role mutual funds are actually performing. First is saying mutual fund provide investor the freedom to earn on their personal savings. Investment can be as less as 500 rupee. Like if you want to invest in the mutual fund, you can start with the 500 rupee also. है ना? Like it's very economical investment, like anybody can do that. Next, second, mutual fund offers relatively high liquidity. It means it can be converted into cash. Third, mutual fund investment are not tax efficient and serve as income tax shield for the investor. They are not tax efficient and do not serve as the income tax shield for the investor. Fourth, mutual funds are managed by professional fund managers that I have told you, who are responsible for taking smart decisions. So you have money, you want to invest, but you do not know where to invest the money. You do not have that much knowledge and you do not have that much time to study each and every financial market, then study in which company we should invest, and then you can take your financial decision. Not possible, because you cannot spend that much time of yours in the R&D. So simply you hire the professional fund manager and they invest your money. Okay, so you have to answer the correct statement about the role of mutual funds. A, B, C or D. Only third and fourth, only fourth, only one, all except three. Which of the following is correct? Okay. So the right answer for this particular question is your all except three, because not all the mutual funds do not cover tax efficient. Certain number of mutual funds are there, like ELSS. If you invest in the ELSS scheme of mutual fund, you will get the tax benefit. So the third statement is not true, because it is saying it is not a tax efficient. Mutual fund can be or cannot be tax efficient, depends on the scheme you are investing in. Okay, so the right answer will be D. Right answer we have is D. Okay, next we have here that's talking about which of the following is our objectives of MFI. Which of the following is our objective of MFI? MFI stands for Association of Mutual Fund of India. MFI stands for what? It stands for Association of Mutual Funds in India. That's a self-regulating organization of your mutual fund. Okay, so first is saying they promote best business practices and code of conduct. Second, they maintain high professional and unethical standards. Third, they interact with the SEBI and for the betterment of mutual fund industry. Fourth, they develop well-trained agent distribution network. Fifth, they promote nationwide investor awareness program. So you have to answer out of these five, which are the actual roles of mutual fund. Which of the following are the roles of mutual fund? A, B, C or D? Okay, so the first is correct, second is half correct, not half. It do not maintain the unethical standard, it maintains the ethical standard. So this un is wrong. So right answer will be all are the objective except your second statement, because it is saying unethical standard. No, it should maintain the ethical standard in the industry. So right answer will be your D. Okay, right answer is D. Next question. Next we have that's talking about filling the blanks. The process through which a mutual fund scheme launches a new mutual fund is called a dash. Okay, whenever you issue a new mutual fund scheme, dash is the answer of that particular term. In case of open-ended and close-ended, that's a type of mutual fund scheme. The NFO should be open for dash duration. Then the NFO can make its investment only after the offer period closes, and it must allot the units and send the account statement to the investor within dash duration of closure of NFO. Now you have to answer which of the following is correct. Now I guess it's very easy. It cannot be IPO, because IPO is the initial public offering whenever the company issues shares for the first time. That is IPO. And here you are not issuing shares, you are issuing new scheme in the mutual fund. So it cannot be your second statement. It means second option. It is net fund offer, sorry, it is new fund offer. That is definitely correct. That is NFO. So it is your new fund offer. Okay. Now you have to answer that in which duration. Hana, we are saying that in case of open-ended and close-ended, the NFO should be open for how many days? And you have three options, and all the three options saying 15 days, 15 days, 15 days. It means it should be open for 15 days. Now, to find out the answer, we should know the last filling the blanks answer. Then only we will find out the answer. Third is saying the NFO can make its investment only make the offer period closes, and it must allot the units and send the account statement to the investor who invested in the NFO within dash days. Okay, it is 5 days, 15 days or 30 days. Within how many days you have to maintain or you have to send the account statement to the investor, and that is actually 5 days. So right answer will be your A, not a 15, not a 30. So right answer will be your A option. NFO is a way by which you can issue the mutual fund new scheme, that is new fund offer. It should be open for 15 days if anybody want to purchase the scheme. Then third thing, after purchasing the scheme, the account statement have to be transferred to the investor within 5 days of the transaction. So right answer will be your A. Okay. Next question. Which of the following are the risk which is associated with the mutual fund? So if we talk about mutual fund, I said the mutual fund invests money in the diversified sector to minimize the risk. It minimizes the risk, but it will obviously cover the risk. It have risk. Mutual fund are not without risk. Only instrument which in which you do not have to face risk, that's a government security. It's a risk-free assets, because you are giving your money to the government, and it's very obvious government will not take your money and do any kind of fraud or default here. So mutual funds are subject to market risk. That's a tagline you have heard every time when you talk about a mutual fund, or when you watch a advertisement, or when you visit the mutual fund offices. So it's a mutual fund subject to market risk. So it's very obvious market risk will be there. Okay, it is there. But apart from rest of the types, it is written here, which of the following are the risks which are associated with mutual fund? So market risk is there because it's tagline only saying. Market risk means the risk which depends on the market. So you have invested your money in share market, in commodity market, in derivative market, in let's say real estate, in gold and etc. Okay. But now you have to face loss or not. It depends on what? It depends on the market. If any one of the sector in which you have invested, it went to the loss, you have to face loss. If all the sectors together went to the loss because in economy there is a crisis going on, then you have to face that loss also. So market risk is there, concentration risk is there, interest risk is there, liquidity risk will be there, credit risk will be there. It means answer will be C, all of the above. All are these risks which are associated with the mutual fund. In mutual fund, if you invest, all these kinds of risk will be there. Okay, so while you are investing in the mutual fund, do not have this wrong idea with you that my money is totally secure, 100% secure. No such kind of risk will be there. No, it will be there. Risk will be there, but comparatively from the other markets, from the other instrument, it will have a less risk. Okay, so right answer is C, all. Next, dash is a mode of investment in mutual fund by which individual invest a small amount at regular intervals in the mutual fund. Okay, so what we are saying here, dash is a mode of investment in the mutual fund which individual invest a small amount at a regular intervals in the mutual fund. Okay. Second, it is a technique through which an individual gives consent to the mutual fund company to transfer money from one scheme to another in a systematic and periodic manner. So you have two plans. Mutual fund actually have 3 plans. Okay, and I will tell you the name of them. Systematic transfer plan, systematic investment plan, systematic withdrawal plan. Okay, SIP, STP, SWP. These are the 3 plans of mutual funds. Now, out of these 3, which plan is actually the plan in which you will find that mutual funds investment will be done at a regular intervals? Second, in which you can transfer from one scheme to another. So if it's a transfer, it's obviously a systematic transfer scheme or transfer plan, STP it is. And when you are investing in regular interval, that is systematic investment plan. So your right answer is B. The first filling the blank is talking about a systematic investment plan in which the investment will be done in the regular interval. And the second one is systematic transfer plan, that is investment done in the certain one scheme to another. So your right answer will be B here. Okay, right answer is what? It is B. Next, Dash is a privately pooled investment vehicle which collects funds from investor, whether Indian or foreign, for investing in accordance with the defined investment policy for the benefit of its investor. Okay, so you have to answer which of the following is correct here. A, B, C or D. Is it a mutual fund? Is it a hedge fund? Is it an alternate investment fund, or is it none of the above? So it's a privately pooled fund. You have collected fund from the various investor, from investor. Whether they are Indian, whether they are foreigner, doesn't matter. Then you are investing that money with a defined investment policy for the benefit of the investor. So what? It cannot be mutual fund, it cannot be hedge funds, because they invest in those, any diversified sector to minimize the risk. They do not have a defined investment policy with them. But alternate investment fund have a defined investment policy in which it will be told to you, this is the money, you can invest this money in this particular sector. So the right answer will be C. Okay, right answer is what? It is C. Alternate investment fund. Chalo, next question. Next question is talking about here. It is the opposite of SIP. Individual redeem money from mutual fund scheme in a small amount. In this situation, individual first deposit the money in mutual fund scheme whose risk is generally low, such as liquid funds. Thereafter, the individual can redeem their money from the mutual fund scheme at a regular intervals. Depend on the requirement. So why it is opposite of SIP? Because in SIP you invest in the regular intervals. Here you are withdrawing the money in the regular intervals. Okay. So the frequency of withdrawal can be weekly, monthly, quarterly. It depends on your requirement when you are investing. So what kind of plan is it? Systematic withdrawal plan, systematic transfer plan, systematic investment plan, or none of the above? So it cannot be systematic investment plan because it's opposite. It is what we are talking about. So it's a systematic withdrawal plan in which you can withdraw your money in a certain installment. So your right answer will be A. Okay, right answer is what? It is A. Next, filling the blanks we have. First is talking about a dash is one that charges a percentage of NAV for entry or exit. Like when you enter the mutual fund scheme or when you exit, you have to pay a certain amount there as a charge. Second, a dash is one that does not charge for entry or exit. And the another one is there in which when you exit or when you enter, you do not have to make any kind of charges. So is it a load fund? No load fund, exit fund, exempted fund, load fund and no load fund. So it's very obvious. If you are exiting, if you exit or you enter the scheme of mutual fund, when you have to pay certain amount, you have to pay the charges, that's a load fund. And when you do not have to pay, that's a no load fund. It means right answer will be your C. Okay, remember where the load funds will be included in your investment and where not. This is very important. Good evening everyone, welcome to the official YouTube channel of Officers Adda 24/7. So first of all, let me know how are you all, and also let me know is audio video both are okay, are we good to go? So we are again here in the victory series, and every day we are discussing one particular unit of yours with the advanced question practice that we are doing. So in today's session we will be covering the unit number 41st of your JAIIB module D IFS subject. So yesterday, or I can say on Saturday, we have discussed unit number 43, that was your pension products. So we have skipped a certain unit, that was the insurance product, unit number 42. So that unit we will be covering today. So let's start. Before moving forward, I would like to inform you all that we have started a crash course. Okay, crash course have been started, or crash batch have been started from 18th of March. It means from today only. In the morning at 6 a.m. your PPB classes are started by Suprabha ma'am, and at 8 a.m. IFS classes are started by me. So your crash course is started with these two subjects. So do make sure that if you haven't seen the demo session, then go to the playlist. You will find the demo session of today's morning, and tomorrow there will be one more demo, so you can check tomorrow's demo also at the same time. Okay, and if you have not enrolled yet, you are thinking about it, do enroll soon, because right now 81% discount is going on this course. By using the code Y496 you will get this discount. This is available till tomorrow 12 p.m. After that it will end. So if you are thinking about it, enroll soon. Now, so let's start. This is our class number 15, and as you know, we are discussing Indian economy, Indian financial system, module D. So we have covered till now the module D's 29, 30, 31, 32, 33, 34, 35, 36, 37, 38, 39, 40, 41 and 43 units. These units have been completed. We have skipped the insurance product by mistake. So today we will be talking about the insurance product unit. That's unit number 42. Okay. So first of all, insurance sector regulated by whom? It is regulated by Adda, Insurance Regulatory and Development Authority of India. That's the Adda. So Adda regulates your insurance market, insurance products, and there are life insurance and general insurance products. There are multiple types of scheme or the pension products we have. The certain the insurance products we have, life insurance and general insurance. In the life insurance we have 3 types of classes. In the general insurance we have multiple types of insurance plans. And when it comes to the insurance, we also have 2 basic government schemes, Jeevan Jyoti Bima Yojana, Suraksha Bima Yojana, that is also important. And we have around certain 5 to 6 principle of insurance, that is also very important. So when you are doing a conceptual study, do make sure you cover all these. Now we are going to start with the first question of today's session of unit number 42. That is talking about which of the following is our bank assurance model. So bank assurance is actually a kind of insurance service that is provided by the bank. So banks are allowed to provide insurance product to their customers. Banks are allowed to provide insurance product to their customers, and this have been recommended by the R.N. Malhotra committee. So R.N. Malhotra committee in the year 2000 recommended that bank can start selling the insurance product, and the new model have been introduced. That's a bank assurance model, in which bank and insurance company comes under a partnership, and bank sell the insurance company's product. That's a bank assurance. And bank assurance have a certain model, so you have to answer which of the following are the models of bank assurance. First is saying corporate agency model or distribution alliance model. Second is saying joint venture model, where an insurance company and a bank share the equity. Third, the capital of their joint venture subject to local government regulation. Fourth, merger between a bank and an insurance company. And fifth, the build or buy own insurance operation. So these are the 5 models have been given in front of you. Which of them you have to answer are the bank assurance models? Let me know. So which of the following is correct here? And the answer is all are these 5 types of models under the bank assurance you can find, where bank are selling the insurance product of a insurance company without taking any risk participation. Bank do not participate in the risk management, because bank is only a mediator who sells the third party product. The risk will be managed by the insurance company only. Okay, so right answer here is C. Second question we have here, that's talking about Adda's microinsurance regulation was introduced in 2005. It defines a microinsurance policy as a general or life insurance policy with a sum assured of 50,000 or less. A general microinsurance product include which of the following? So in micro insurance, first of all, micro insurance is a product of microfinance. Microfinances means when you provide the micro savings, micro pension, micro insurance, micro credit facility to the individuals. So when it comes to the micro insurance, that's a product of microfinance, in which up to 50,000 or less than 50,000, or we can say up to 50,000, insurance will be provided to the those households whose earning is in one annual year up to 3 lakh or less than 3 lakh. Okay, those households can get this 50,000 insurance. Now in the micro insurance, the insurance will be provided for general as well as life insurance. Okay, so here question is asking, out of the insurance policy written here, which is a general insurance policy, general micro insurance product? Out of all these options, which is the general micro insurance product? A, B, C or D? And the right answer will be your actually health insurance. Any contract covering belongings just like your herds or livestock, your tools or instrument is correct. Any personal accidental cover is correct. But an endowment insurance contract, it's not a general insurance, it's a life insurance plan. It's what? It's a life insurance plan. It means obviously if we talk about all are the part except your fifth option. So it should be fifth here. So right answer will be C. Okay, right answer will be your what? C. So all are correct but not the C option. Sorry, fifth option. Fifth option is not correct. All the four are general insurance but not the fifth one. So answer will be your all except 5. Answer will be your all except 5, not 6. It is written wrong by me. So it is all except 5. Okay, because endowment insurance contract is a life insurance contract, not a general insurance contract. Now next we have question, which of the following cases is a not exclusion case of motor insurance policy? Not an exclusion case of motor insurance policy. Hana, so first of all, in motor insurance policy, there are a lot of insurance products or there are a lot of cases which cannot be covered under the motor insurance policy. So you have to answer out of these, which of the following product is there or which of the following case is there which is not covered in the exclusion policy. First is saying landslide, rock slide. Second, not having a valid driving license. Third, under influence of intoxicating liquor or drugs. Then accident taking place beyond geographical limits. Then while vehicle is used for unlawful purposes. So out of these 5, what do you think which of the following is a not exclusion case? Not exclusion case, A, B, C or D? Actually, in case of valid driving license, you won't get insurance. In case of you are in the influence of drugs or liquor, you cannot get insurance. Accident take place beyond the geographical boundary, cannot take insurance. While vehicle is used for unlawful purposes, you cannot take the insurance. So all these activities are there which are the exclusion, but which of the following is not? The landslide and rock slide is not. It will be covered. It is a part of your motor insurance policy. So right answer is only one. Only one is the not a case of exclusion from the motor insurance policy. All the other are. So right answer will be your D. Clear? Right answer is your D. That is only one option. Next question we have, which of the following is a type of annuity plan? So annuity plan, we are talking about annuity plan actually is a kind of insurance cum pension plan kind of thing. So annuity plans are actually giving the pension to the old age people in their retirement age. Okay, that's the annuity plan. So you have to answer which of the type of annuities are there. Deferred, immediate, both, none. And it's a very simple question. There are 2 types of annuity plan only. First is deferred, second is your immediate. It means right answer is C. Right answer will be C. So do remember the annuity plan means a pension plan for the old age people in the retirement age. So right answer here will be your both, that is C. Okay, which of the following is the types of annuity plan? That is your both, C. Next question we have here. It is a positive duty voluntarily to disclose accurately and fully all facts material to the risk being proposed, whether requested or not. So it's saying it's your duty, it's voluntary, that you have to define whether it has been asked to you or not, that what kind of risk or the fact materials related thing is there. Non-disclosure of any material fact may be unintentional on the part of the insured. Even so, such a contract is rendered voidable. Let's say you have forgot to told about certain material fact to the insurer, to the insurance company, but still your contract will be void. Okay, so at the insurance option, and it can refuse any compensation. So in the above statement, which of the following principles have been defined? So the statement is saying, this is your statement, and the statement is saying no matter what they have been this have been asked from you or not, but you have to disclose all the material facts. If you have not disclosed any fact intentionally or unintentionally, doesn't matter, you won't get the compensation here. If you hide certain material facts, you won't get the insurance compensation. So which principle is it? Principle of insurable interest, principle of utmost good faith, principle of proximate cause, principle of contribution. So it is like you have to define whether they have been asked or not. So it's the utmost good faith. The person who wants to take the insurance have to be in the utmost good faith, that you have to define what are the case here. Okay, so right answer will be your B. Right answer is your B. Next question. Life insurance benefit patterns fit into one or a combination of three classes. Okay, when you talk about life insurance benefit, its patterns fit into one or a combination of three classes. Which of the following are those three classes? Term life insurance, whole life insurance, endowment insurance, all of the above. So as I have told you, if we talk about insurance plan, life insurance plans, they have a three classes here. Hana? So it can be a combination of all the three. It can be a one single policy. Which of the following class is it? And answer is all of the above. The term life insurance is life insurance, the whole life insurance is insurance, and endowment plan is also there. So right answer will be D. All of the above. Okay, next we have here, what among the following is a feature of term insurance plan? The feature of term insurance plans we are asking. So first of all, it's a part of your life. So first is, this type of insurance furnishes protection for an unlimited number of years. Second, it terminates with the maturity value. Third, initial premium rates are low compared to the life products. Fourth, the period of protection is unlimited. So which of the following is correct feature about the term insurance? The correct feature about the term insurance is A, B, C or D? Okay, so what among the following are the feature of a term insurance plan? It is that initial premium rates are low compared to the other life products. Okay, so right answer is C here for the term insurance plan. Now next we have here, which among the following statement is not a feature of your insurance ombudsman? Not a feature of your insurance ombudsman scheme. So like we have insurance, like insurance ombudsman, we also have a banking ombudsman, or we can say we used to have the banking ombudsman and ombudsman scheme for NBFCs, ombudsman scheme for digital transaction. They all have been merged together and they created an integrated ombudsman scheme. Similarly, we have an insurance ombudsman scheme to take care or to resolve the complaints of the customer who are taking insurance. So which of the following is not a feature? First is saying insurance ombudsman operates only within the territorial limits specified on the insurance ombudsman website. Second, the insurance ombudsman can award compensation up to 15 lakh, including relevant expenses if any is there. Any compensation whose complaint on the same subject matter is or was before a court or consumer forum cannot approach to insurance ombudsman. No fee or charges are required to be paid. So you have to answer not a feature of insurance ombudsman. Which of the following is not a feature of insurance ombudsman? A, B, C or D? A, B, C or D? Which of the following is correct? Okay, so right answer here will be your actually the B, because the insurance ombudsman provide the award compensation of 30 lakhs. Okay, do remember that it is 30 lakhs. So right answer will be your B. It is not a feature, all the others are the feature. Okay, in case of banking ombudsman it is 20 lakhs, in case of insurance it is 30 lakhs. So right answer is B. It is not a feature of insurance policy, or sorry, insurance ombudsman. Now, next we are talking about micro insurance regulation is issued by Adda, have been made effective from which year? So, micro insurance is a product of microfinance we have discussed, in which up to 50,000 or 50 or less than that insurance will be provided to the people. And micro insurance cover your two types of insurance: micro life insurance policies and micro general insurance policies. Okay, so now you have to answer in which year it became effective, and the answer of that is 2005. In 2005 it became active. The right answer will be your A. Okay, do remember always, if we talk about microfinance, microfinance is important. Microfinance institutions are also important. So here they provide micro savings, they provide micro credit, they provide micro pension, and the micro insurance. Okay, and the micro insurance amount is 50,000 or less, and this have been asked in the last paper also, so this is important. Good evening, everyone. Welcome to the official YouTube channel of Office Study 24/7. So first of all, let me know how are you all, and also let me know is audio and video both are okay. Are we good to go? So as you can see, this is our session of victory series that used to happen, or that regularly happening at in the evening 7 p.m. But today we are taking this session at 11. So in this particular session, you all know that we are discussing about your particular IEIFS module D right now, and every day we are discussing one unit in which we are practicing questions that will be advanced questions. Okay, so this is your class number 16. We have discussed already the 15 classes have been done on your module D, and now we are talking about that class 16 will be today. And if we talk about the topic name, the topic will be your unit number 44, that will be your para banking and financial services. Okay, the topic of today will be your para banking and financial services. So this arrow will be here, unit number 44. Okay, that we are going to discuss. So first of all, when it comes to the para banking, when we are talking about a para banking, what is a para banking? It is a service that we are providing, the bank is providing. When the bank is providing additional services apart from its day-to-day activity. So bank provide day-to-day transaction. What are the day-to-day transaction of a bank? Deposit, withdrawal, lending. Okay, these are the day-to-day transaction of a bank. Apart from these activities, when bank provide the additional services to the customer, that is known as para banking. Okay, So let's discuss the questions on the same. First question is talking about here. In which of the cases RBI's approval to invest in the subsidiary and a financial service company is not required? है ना? RBI is the central bank of our country. All the banking except merchant banking is regulated by RBI. So question here is asking which of the cases RBI's approval to invest in a subsidiary and a financial service company is not required. First is saying the investment is in a company engaged in financial services. Second is saying the bank has a minimum prescribed capital and has also made a net profit in the immediate preceding financial year. Third, the shareholding of the bank, including the proposed investment, is less than 10% of the investee company's paid up capital. And the fourth is saying none of the above. So, out of these four, what do you think? Which of the following is actually not required the approval of RBI? Okay, and the answer will be your none of these, because all these are the kind of situations which requires the approval from RBI to invest in a subsidiary and a financial service company. Okay, the right answer is none of the above. D will be your right answer. Okay, next question. What does IAS stands in relation to para banking and financial services undertaken by a bank? So we are talking about IAS. So what does it stand when we talk about para banking and financial services which is undertaken by a bank? Is it an investment advisory service? Is it an Indian administrative service? Is it an insurance advisory service, or none of the above? So what is actually the full form of IAS? So it is related to your para banking. Anna, it is related to what? It is related to your para banking. So it is your investment advisory services. In the para banking and financial services, bank provides the investment advisory. Okay, so IAS stands for what? Your investment advisory services that will be provided by bank to the customer. And it informs the customer where to invest, how to invest, what amount should be invested. So this is the investment advisory services. No, it's not C option from you, ma'am. It's a investment, not a insurance. And it's an investment advisory. Now, next question is talking about introduction of any new portfolio management service requires the prior approval of which of the following? If you are introducing any new portfolio management service, it requires whose approval? So question is asking about portfolio management services. So the services are provided by bank under the para banking. Okay, under the para banking, the bank provide portfolio management services to the customer, in which bank manages the portfolio of customer investment. So let's say as a customer, I have invested my money in share market, in let's say commodity market, in mutual fund. I have invested money in gold, in real estate. I had the FD, I have the insurance policy. So I have diversified my investments. Okay, so I have created my own portfolio by investing in the different sectors. So this portfolio will be managed by the bank in the para banking. That's a one of the para banking service. So to provide or to act as a portfolio management service, from whom the permission will be required or prior approval of which of these is required? And the answer will be obviously RBI, because the portfolio management service is a part of your para banking services. And if it's a para banking services, it always comes under the Reserve Bank of India. So your right answer will be B, that is Reserve Bank of India, RBI. Do remember, only merchant banking is the type of banking which is regulated by SEBI. Otherwise, all the other types of banking will be managed by RBI. Whether it is your para banking, okay, whether it is your onshore banking, whether we can say we have a narrow banking, we have a shadow banking, okay, we have a universal banking, the Islamic banking, okay, the door-to-door banking, then we have relationship banking, etc. So all these type of banking services will be regulated by RBI. Only there is a merchant banking that will be regulated by SEBI. If you want to participate in the merchant banking activity, you have to take permission. Okay, do remember that. Next question. What does IDMD stands for? What is the full form of IDMD? Again, related to para banking. Is it Institutional Leadership Management Department? Is it Internal Debt Management Department? Is it Institutional Debt Management Department or none of the above? Which of the following is the right full form of your IDMD? So this is a kind of department under the banks or within the banks that provide a certain one of the para banking services to its customer. So which of the following is the right full form? IDMD stand for what? It stands for your Internal Debt Management Department. It stands for what? It stands for your Internal Debt Management Department. Okay. Next question. Right answer is B. Next question we have, bank should obtain prior approval of RBI for making strategic investment in venture capital funds, investment equivalent to more than dash percent of the equity per unit. So we're talking about that bank should obtain prior approval of RBI. A bank should do what? Bank should obtain the prior approval of RBI for making the strategic investment in venture capitals. Okay, so investments equivalent to more than dash percent of equity per unit is allowed. Is it 10%, 5%, 15%, or 50%? So venture capital funds, we know it was introduced in the year 1972 on the recommendation of Bhatt Committee. Venture capital collects funds from various investors and invest that fund in the startup only. So now bank should obtain the approval of RBI if bank want to make a strategic investment in venture capital. And when the bank is allowed to make the investment capital, here the investment will be equivalent to more than dash percent of your equity or unit. And the answer is it should be 10%. Anna, it should be 10% of the equity. Next. Introduction of any new portfolio management services require the prior approval of RBI. That's a repeated. Which among the following does not comes under the para banking and financial service? So which of the following is not one of the services of para banking and venture capital? Is it bank investment in venture capital funds? Is it insurance business? Is it biz discounting or is it factoring services? So out of these four services, what do you think? Which of the following service is actually not a service that will be part of your para banking and financial? So bank's investment in venture capital fund is actually a para banking service. We have just saw that. Okay, insurance business. Insurance is a third party product of a bank. And insurance is what? Insurance is a third party product of a bank. Insurance is not a product of a bank but a product of insurance company. But bank sells this insurance policy to customer to earn commission. So obviously insurance is a third party product. It's a para banking. Then factoring services. Factoring is a service. It's a tool in which bank provide immediate cash to the sellers in case of trade by taking the trade receivable. Okay, that's your factoring. So factoring is also a kind of para banking, but not a bills discounting. Bills discounting is the bank's day-to-day transaction part. So right answer will bills discounting does not come under the para banking financial services category. So right answer will be your C option. Okay, next question. In which of the following cases the RBI's approval to invest in subsidiary and a financial service company is not required? The case in which RBI's approval to invest in a subsidiary and a financial service company is not required. First is saying the investment is in a company which is engaged in the financial services. Second, the bank has a minimum prescribed capital. which include capital conservation buffer. So the capital conservation buffer actually was introduced under the Basel 3. Under Basel 3, this was introduced, and this is the additional capital that have to be maintained as a reserve by the banks or themselves from any kind of future risk. Okay, and the capital conservation buffer is 2.5% of the risk-weighted asset of a bank, and has also made a net profit in the immediate preceding financial. And the third is saying that the share of the bank, including the proposed is less than 10% of the investee company's paid up capital. So which of the following you think is actually is a right answer in which RBI's approval to invest in a subsidiary and a financial service company is not required? The answer is none of the above, because in every case RBI's approval, your answer will be none of the above. Okay. Now, next question we have, which among the following is are correct about the agency by banks? Which of the following agency bank provide? Which of the following is the correct about the agency business by banks? First is saying agency business shall be undertaken the product and services which a bank is permitted to deal in as per the Banking Regulation Act 1949. Second, the service shall be provided on fee basis without any risk participation. Third, the corporate agency of insurance companies undertaken departmentally by banks shall be as per the board approved. And the last option is saying all of the above. Which of the following is correct about the agency by bank? So bank provides the agency business services. Now bank gives the agency services in which banks actually undertake the product and services in which a bank is permitted to deal in. है ना? So Banking Regulation Act Section 5B and Section 6 have given a set of services in the name of product and services that can be provided by bank. So that's the agency part. Second is saying the services shall be provided on a fee basis without any risk participation. The bank will, if bank is providing insurance, if bank is providing portfolio management services, bank will not undertake any risk participation. Bank will work as a mediator to provide those products to the customer, but bank will never be taking participation. The third is saying corporate agency of insurance company undertaken departmentally by bank shall be as per the board approved policy. And all the statements are correct about the agency by bank. Okay, all the statements are correct in context to your agency